Imagine bringing your side project to life just by thinking about it. Base 44, a complete AI creation platform. Describe what you want and watch it take shape. You can plan, customize, and expand in any direction. From tools built for one from tools
Hello, this episode of the Weekend Chart Prep is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Leroy Sr. and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In Phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, Phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Good evening, everybody. How y'all doing this Sunday evening? And while I'm easy like Sunday evening. Yeah. Oh. How y'all doing, man? How y'all doing, man? I said, hey, how y'all doing? You send out the bat signal in the Discord. Send out the bat signal in the Discord. How y'all doing today, man? Ain't nobody in Zoom in here with me. I feel lonely. I feel lonely in Zoom. Ain't nobody on the Zoom with me. How y'all weekend going, man? Y'all weekend all right? Y'all weekend all right? Huh? That's why I'm easy. Easy like Sunday evening. What's going on, man? I see we got Here to Learn and Share over there in Tube Land. We got Kim over there in Tube Land. Hey, wait a minute. When I first opened up this Zoom, right, I saw Kim in the Zoom. And when I looked over there a few minutes ago, it ain't nobody in the Zoom. And now I see Kim made a comment over here in the YouTube. Kim, did you switch out and move to YouTube? Did you get out the Zoom and switch out and move over to YouTube? I see Valentine up in here. Hola, Valentine.
Hola, ¿qué pasa? ¿Qué hora es? uh, that's good. Your weekend going by too fast? My weekend, I ain't gonna hold you. My weekend kind of dragging. This weekend kind of dragging, you know. I didn't have anything planned for the weekend. No, you know, big plans or anything like that. I was just chilling. I was just pretty much chilling, man. Nothing, I ain't had nothing planned, nothing going on, nothing to do. I was chilling, man. And but it's kind of dragging. It's like, what's really going on? Why the weekend going by so slow? Had an amazing time at worship service today. Man, they they was doing. I forgot that they was doing like I can't remember what they called it. Like a sing. I call it a singing seminar. I forgot they was doing like a singing seminar this weekend. Brought this gentleman down. Brought a brother down from, I can't remember where he from, but he like, what I'm saying? He go around to like different congregations doing like these singing seminars, getting people fired up about, what I'm saying, the singing during worship, like the importance of everybody singing, everybody, what I'm saying, making a joyful noise for the Lord. It ain't about can you sing, but if you can sing, he be teaching like the different parts, like if you a baritone, what parts you sing, if you a tenor, what parts you sing, if you know how to do this, he break the hymns down. And man, now they usually sing good every Sunday morning. They be good singing, when they be singing the hymns, what I'm saying? When we reach that city, yep, the New Jerusalem, they be singing the hymns. It'd be nice, But today, man, I thought the Georgia Mass Choir was up in there. They were singing so good. He had, like we sang most of the morning. It was good. I really enjoyed it. I was like, man, I ain't know these folk could sing this good up in here. All right, we had a good time, you know. And then I was talking to a few people about a mentorship that I'm doing for high school seniors. I'm doing a free mentorship for high school seniors at a couple congregations around here. They it's only one over there with us. This was like, what I'm saying, people ain't getting busy during this year. 17, 18 years ago to have babies in this year. This was like a slow year. The 2026 year, the class of 2026 year, this was like a slow year in the love making department for their parents, cause the the what's the name? The what's the name? It's like it ain't many seniors this year. Just like last year, it was a slow year. It was Timothy. It was like four. It was four people graduating in our local congregation. Right. It was a slow year last year. Now I know Chris them 2020 seven, because Chris 2027, I think. It's 2020, this is 2026 year now. The next year gonna be Chris 2027. I know Chris and them probably gonna be jumping, because I know for a fact when Calandra had Chris, it was like two other people in the hospital at the same time with her having babies. And it was like other people that we knew that was pregnant at the same time with her having babies. So hopefully theirs be a little bit thicker, but it's on like ones and twos, right? This was a slow year. This was a slow year back in the day. I'm folk ain't like, I guess they ain't like each other back in the day. Around this time here, they was on the breakup. Yeah, but I'm gonna do a 3-month mentorship for high school seniors. This is It's my gift to my brothers and sisters in Christ that's interested. I mean, I ain't trying to twist nobody arm. So I just put it out there. If none of the seniors say, hey, I want to learn, I'm interested, I won't be doing it. But I'm starting the first Saturday in October, and we gonna meet via Zoom every Saturday for 3 months. We're gonna meet every Saturday. I'm gonna give them a lesson. And you know, and basically it's gonna be basically the Smart Money Manuscript in real time with me. That's what it's gonna be. It's gonna be basically the Smart Money Manuscript in real time with me, right? Trying to, because I believe the children are our future. Trying to, bless them. They, I'm saying, they high school seniors. They're probably 17 or 18. If they're not 18 yet, they're going to be 18, because typically when you graduate high school, depending on if you got an early birthday or a late birthday, you're going to be 17, almost 18, or you're going to be 18 already, depending on when your birthday fall. When you graduate high school, and when you're 18, what I'm saying, you can open up a brokerage account. What I'm saying, you can open up a brokerage account when you're 18. So if you got a job, I'm saying, if you have a job, that means you can start contributing to your Roth IRA, as long as you're working, as long as you have had employment, right? As long as you have had employment, you can contribute to a Roth IRA. You don't have to be 18, but at 18, you can open a brokerage account. You know what I'm saying? So they need to know about this stuff. I believe the children are our future. So that's the way the good Lord led me to give something back to the youth them. Y'all ain't get on here to hear me talk about all of that, man. Y'all got on here to do a weekend chart. What's going on, RN Deborah? We got RN Deborah today. We ain't got light-skinned Deborah. RN Deborah popped up in the Zoom with me. Let's go ahead and get to this weekend chart prep. Y'all don't care nothing about what I'm talking about, man. Y'all ain't, you know what I'm saying? Y'all don't care about nothing what I be saying, man. Y'all, my videos don't even get no views, man. My videos don't get no views. I ain't making no money off YouTube. If I wasn't a trader, I'd be in a bad way. If I was just trying to live off YouTube, I would be in a bad way. I have to go back and punch somebody's clock and work a 9 to 5. What a way to make a living. We did a weekend chart prep in a minute, so let's just go on up here to a monthly chart. We're going all the way up to a monthly chart. All the way up to a monthly chart. We can see that looking at the charty tart, right? We can see that we engage with that monthly liquidity as we anticipated, right? We have 1, 2, 3, 4, 5. We got 5 days left in this trading month. 1 week. Excuse me. 1 week. That is a blessing. Hey, great that they're learning this early. Thank y'all. Yeah, that's dope. I wish I had that when I was in high school. I couldn't. Valentine, I was trying to find like a Hispanic accent. I don't know what that was just now. That's like kind of like Cheech mixed with Goofy. I don't know what that was. We got like a week left in this month, right? Looking at let's look at the three sisters. Let's look at see if we got any divergence going on. Let's see if we got any divergence. Pop up to a monthly chart. Oh, excuse me. Oh, we got a little divergence going on. We got a little divergence going on right now, right now, right now. Ooh, 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 ooh. Well, Tim, Why do you say we have divergence going on when all three indices have taken out the monthly high? Hey. Well, I'm glad you asked that question, little Timmy Rogers. The Dow took out last month's high. The ES took out last month's high. The NQ took out last month's high. Now, if we play close attention, if we were to squanchity, squanch, hey, why these not working together? All of these should be, oh, there they go. All right. I'm going to say they should be moving together. Right. So if we squanch them all up, what do you notice here? That high, last month's high on the NQ and the ES, which were they? Who can tell me what that high was on the NQ and on the ES versus the Dow? Who can tell me what was that high there and there? Who knows? Who knows? Who knows? Nothing? No, not higher highs. Not higher highs. All-time highs. Very good. Right. There's nothing higher up there. Right. There's nothing higher up there. But if you look over here on the Dow has an all-time high that it has not reached. So we have divergence going on right now, right? We've made new all-time highs on the NQ. We've made new all-time highs on the ES, but we haven't made new all-time highs on the Dow, right? If you are a believer that the Dow will make all-time highs, and if you see signatures on the Dow that backs up that assumption, what can you treat the Dow as in this scenario right here? What can you treat the Dow as in this scenario? NQ made new all-time highs. ES made new all-time high. The sick sister. Very good. Very good. Very good. The sick sister is the belief that the third index will do what the other two have done. Right? And you just don't want to assume it. You want to use the algorithmic clues based off of the buy or sell program, the market maker buy or market maker sell model, that it's going to complete at that high or low that the other two sisters have already engaged. And that's how you utilize the six sister approach. Okay. This gem has been brought to you by the Smart Money Manuscript. Check out the link in the description below. The sales are kind of ashy. They're very ashy. Put a lot of work in, hard. I put some blood, sweat, and tears into that course, and the sales are ashy. So, all right, the NQ looking weaker than the Dow and the ES, right? That's another sign of divergence, right? They're not all doing the same thing, right? The Dow right now is a strong bullish candle. The ES is a strong bullish candle. The NQ is kind of hanging out in the middle, right? The upper wick and the lower wick are pretty much the same size. So it's kind of hanging out in the middle, right? The NQ is over here engineering some liquidity, right? Unwilling to just really get away from that opening price. So we got a week. And what did the historical data on the NQ? Now it wasn't the NQ futures, but it was the NASDAQ, the Qs. What did the historical data say about the Qs? They said something percent of the time. Something percent of the time that it closed lower than it opened. I got it blown up a little bit too big. So looking at the Qs, August, 60% of the time it closes higher than it opened in August. So 60% of the time, August will close higher than it opened. And over the last 5 years, y'all see it kind of fluctuates a little bit because before we came in here, look, it was negative 0.4 on the average over the last 5 years. But now it's negative 0.0, so flat, right? Over the last 5 years, the average return in August is flat. And 60% of the time, it will close higher than it opened, right? So there's a 60% chance that this month will close green, right? 60% chance that it will close green. Now, over the last 5 years, the average return has been 0%. So what is that telling you? That's telling you even if it turns green or if it goes red, the average return is not a huge return to the upside or a huge loss. You do a whole lot of moving around, but on average over the last 5 years, the average return is 0%. You know what I'm saying? The average return is 0% over the last 5 years. Right. So in 2021, it had a 4% return. In 2022, it had a negative 5% return. In 2023, it had a negative 1.5% return. In 2024, it had a 1% return. And then so far, 2025, right, we still going, right? And we ain't finished yet. So when you take those 4 complete years in August, plus what we're doing right now in August, we're coming out flat. So 1 year we had a huge down, right? So 1 year we had a huge up. 1 year we had a huge down, right? So 2021 it was up 4%. Then 2022 it was down 5%. So we had a huge up, then a huge down, then a reasonable down, followed by a reasonable up. And then now this year, we're still slightly up, but the month isn't over yet. Right. So 60% chance that it closes higher than it opened. And if it sticks to the average, then it will be a relatively flat year. I mean, flat month. Right. Over the last few years, right, this 1% right here, it's been a gain or loss around 1%, right? And right now we're floating around 1% right now on the NQ. right? So we'll see how it play out. We got 1 week left to see if we close higher than it opened. And we got 1 week left to see if we close relatively flat or if we get a reasonable 1% or reasonable, you know what I'm saying, to the up or downside, or if we get a fantastic rally, right? We'll see. All right. Now we see we got us a little divergence there. Now let's look at what we got going on. So overall, we came and took out the buy side. We spoke about this before at the beginning of the month. We were saying it'd be nice to take out that high to go into the bearish season, right? August and September, bearish season, right? So we said it would be nice to take out the higher time frame high before proceeding down, right? For the bearish season. We have a monthly BISI that's down here that we created. Nope, not that one. That should break away right there. Right. So we got a breakaway gap here along with a SIBI, right? So we got a balanced price range down here. All right. Breakaway gap. Then we formed a BISI right there. So we leaving this area here on the monthly time frame, right? Looking at this as a balanced price range. Why are we doing that? Because we offer buy side and sell side delivery here, went down, took out sell side liquidity, then we came back and pushed straight through it, cut through it like butter, right? May, slice through without even stopping. June, leave it without even stopping, right? Came all the way up here, made all-time highs, right? In August, we kept going up. No, July, we kept going up. And now August, right? We've taken out that high and we're pulling back off of it, right? So now we've taken out that buy side on a higher time frame, getting ready to go into the bearish season. If the bearish season is to play out, what do we want to see first? We want to see a manipulation of the highs. Right now, we've taken out the buy side and we got a week left in this month, right? So now the higher time frame buy side has been taken, right? Can we go and take out that high again? Sure. But, you know, healthy price action, that high right there can remain intact. Why? Because we've taken out the highest form of liquidity. We've taken out the all-time high. We've taken out a yearly high, right? We've taken out a yearly high. So now we can start a pullback for the bearish season, right? Weekly time frame. All right. So on the weekly time frame, looking at our weekly time frame, as we look it through, we're going to get our charts together. Right. We're going to mark out our weekly high. We're going to mark out our weekly low. Right. I'm going to go ahead and hide this monthly high right now because we've already engaged it. Right. And on the other end, the monthly low down there, I didn't have it on. Right. The monthly low is down there inside of that weekly BISI that's down there. Right. Inside that weekly BISI. And it's also at the high of that monthly BISI for the prior month's low. All right. Okay. So remember what we said about when we was on the monthly chart. What did we say the NQ was doing? We said NQ was up here just engineering liquidity, right? And it's a little bit more clear on the weekly time frame, right? It's a little bit more clear on the weekly time frame, right? Once we've come up, and this is that right there is the beginning of August here, right? Prior to going to August, we come all the way back here to the beginning of July, right? These 2 weeks right here, that's the beginning of July. Once we came up above, oh, that commercial caught me off guard. Once we came up above the all-time highs here, right? We've just been pretty much in this little range right here, right? Unwilling to displace away from this range here on the weekly time frame. So we're just going in there engineering liquidity, right? Right. We come in here, sell side liquidity building up here, right? We poke above the buy side there, come down, right? Right. And we come back up and poke above the buy side there, come back down. So we got sell side down here, buy side up there, right? And now, when we're talking about that high there on the monthly time frame, it'd be cool if that high stays in place, right? Now, what can we watch to see if that high stays in place? All right. So right now, can they go make a new high? Yeah, sure. They can shoot up there and make a new high and then come back down. Right. Yeah, sure they can. Right. But nice healthy price action. We leave that high in place. Right. How we came down here, we took out this sell side right here, right? So we went up, boom, took out the buy side, right? We dropped down, boom, took out this sell side right there, right? So at this point, right, we got us a nice bearish Judy swing based off of this move right here because we engaged the buy side, right? And then we came down, took out sell side, came here, took out monthly buy side. Then this week here, we opened up, came down, took out the sell side on the weekly time frame. Then we got us a nice little rejection come back up here. So this nice little rejection come back up here, you know, to have you looking up like, hey, price want to go up there. It took off up there, right? So what can price do? We got us a nice little dealing range that the algorithm has put in place for us, right? If we're rejecting here and we're anticipating price to go down, right? Now, what we do on the monthly time frame, we said, hey, on the monthly time frame, let's go back to the monthly so you can see. A lot of people can't remember. On the monthly time frame, when we started this month right here, we said, hey, it'd be nice if we took out the prior month's high before we started going down, right? This is the monthly low. This is the monthly high, right? We've taken out the monthly high. We came down, right? And then we ran back up here, right? Okay, that's where we are now. Now let's go to the weekly time frame, right? So on the weekly time frame, if we're anticipating the monthly time frame to come down on the weekly time frame, right? If we expecting us to go down, what would be nice, right? To go and take out some weekly high before going down, right? So if we open up, we can open up, go take out a weekly high and still leave that high intact, right? So we'll be attacking buy side before continuing down, right? On the weekly time frame, right? So we can be watching for that. All right, we can be watching for that. Okay, so right now we got our weekly high, weekly low intact, right? This right here, that's a weekly wick, right? Wicks are gaps, right? So price came down and we made this huge wick, right? If we come up here, take out some buy side, right? We got a huge gap down there that we can retrace back down into, right? Even if we do come up here and take out the higher high, right? But in the sense of, you know, switching over and already taking out that high, right? In the sense of switching after taking out that high and rejecting it, right? Leaving that high intact and then coming taking out that low, you know, because when you reject that high, a reasonable draw can be there. All right. But the weekly is still not giving us much because why? We're still just engineering liquidity. So what we do, we don't try to pick a top, right? We're just analyzing the higher time frame, right? Based off seasonality and thinking, okay, this is what I need to be watching out for, right? I need to be watching out for these things, right? Based off of seasonality. Okay. And also if we look over there, we got a premium wick up there, right? So if we go up there and take out that high, right, we got a premium wick there. You can be looking for price to respect, right? These are the places you're looking for price to interact with. These are the PD arrays you're watching, right? For going up, you have consequent encroachment of this wick that's designed to protect that high, right? Coming down, right? You got consequent encroachment of this wick that's designed to protect that low. Okay. So you're looking at how price reacts. If we come and take out that buy side, how does it react if it makes it to that consequent encroachment? Right? If it decides, hey, I don't want to take out that buy side, I've done enough on the weekly, right? Then you need to find something on the daily to give you reason for it to be like, hey, I've done enough on the weekly, right? Speaking of the daily, let's go down to the daily, right? Right now on the daily time frame, we are in between the tail of two cities. Let me mark out our daily high and low. Right. So right now on the daily time frame, we are in between the tail of two cities. Okay. Tim, what do you mean? We have an inversion fair value gap here. This SIBI right here. On Friday, the 22nd, we closed above this SIBI, creating an inversion fair value gap. But Tim, that's bullish. We going to the moon. Bumpy brakes. Where was this SIBI created? Let's see. Take our Fibonacci tool, run it from that high down to that low. This SIBI was created in the discount, right? Where do you, if a bearish fair value gap is created in the discount of a dealing range, what is the anticipation of that? Be cautious of that weekly fair value gap. YMRTY already tapped into this, creating SMT. Thank you, AA Ron. Thank you, AA Ron, for your input. It becomes
an inversion.
Yes, an inversion. We're not, Valentine. I'm glad you said that, Valentine. We have to be careful when we toss around the phrase high probability, right? We have to be careful when we say high probability, because when we use the term high probability, it means that we are anticipating this to be an PD array that price will come back to and utilize it for the purpose of going to attack the draw on liquidity. So in the case of a SIBI being created in the discount, we anticipate it becoming an inversion fair value gap because it's in the discount, right? We don't anticipate trying to sell off of that because we want to sell in the premium. So we anticipate it maybe becoming an inversion, right? So that price can get back to the premium, right? Now, when we talk about high probability fair value gaps or inversion fair value gaps, we are talking about a scenario where we have the very first bullish fair value gap that's created when we take out liquidity at a key higher time frame level, right? And then we come back and create an inversion of that first imbalance. Now, once we have our change in the state of delivery, right? Once we go past our order block that was created when we went up into that, once we come back down and get our true change in the state of delivery, right? Now we are anticipating this to be a high probability inversion fair value gap for us to trade off of and come back down to take out some sell side, right? But, right, so you want to, you know what I'm saying, want to be careful when we toss around these terms, right? But we're anticipating it to become an inversion fair value gap, right? And it did. It became an inversion fair value gap. Now, since we are in between the tail of two cities, oh yeah, that's what I was saying, right? So now we're in between the tail of two cities because we have an inversion daily fair value gap resting beneath a SIBI, right? This SIBI's job is to keep price down. This inversion fair value gap is a SIBI that we've just closed above. Its job is to keep price up, right? What do we call this? Opposing PD arrays. We got a bearish PD array and a bullish PD array on the same time frame. So we're in between the tail of two cities. Which PD array is going to win? We don't know. We don't even try to guess. We wait for the algorithm to give us a clue, especially when the higher time frame is just engineering liquidity, right? We're just in a range where we just engineer liquidity on the higher time frame. So what does that mean? That means that on this daily time frame and time frames lower, we are slowly building out structure, right? We're slowly building out structure, right? Price came up here, right? Took out a high. Price came down here, took out a low. Price traded back up here, took out a high, right? Price retraced back down, right? Took out a short-term low right here, right? Price came down and took out a short-term low. So right now on the daily time frame, right, we are inside a bearish dealing range that has just taken out internal liquidity inside of a bullish dealing range, right? So which way is price going? Who can tell me which way price going right now, right? We have a bullish dealing range here. We retraced back down into a discount and took out internal sell side liquidity, right? Once we came and took out that internal sell side liquidity there, right? We retraced, we started to go back up. And while we came down and took out that and started to go back up, we created a bearish dealing range here. And now we have retraced back up to the premium. So who can tell me which way price is going to go right now? Light skinned Deborah, which way is price going right now?
I don't have my crystal ball handy, but to me, it's making higher highs. No, yeah, higher highs and higher lows. So, I mean, that can give me a clue, but I'm not sure.
Okay,
Can you hear
very
me?
good. Yeah, I said, okay, very good.
Oh, okay.
That is a very good answer. You know why that's a very good answer, light skinned Deborah?
Why?
I'm asking you. If you don't know why it's a very good answer, that just mean you guessing.
Oh no, I mean that's my well I mean that's just what I see.
And why do you see that? It's an
Uh,
algorithmic reason to why you see that. Explain it to us.
mm-mm. Mm,
Okay, so what is the algorithmic? What's the algorithmic term
order
for
flow.
yeah? What's the algorithmic term for when price is making higher highs and higher lows? When price is making higher highs and higher lows, what do we say? And we do not say upward channel. We do not say upward. Monica, we do not say upward channel.
What about trending up? No.
Trending. We don't say trending up. What's trending up?
Uh,
Turning up
price
would
is
be bullish.
bullish.
Was bullish? What's a bullish trend?
Bullish price delivery.
Close.
Uh,
You already talked about or you said order flow. So what is it? What what we got in order flow?
The bullish price delivery, you saying?
What is bullish price delivery in order flow? What is bullish price delivery? When we think
I
about
don't know. Come on, Deborah, we got this. What's going on?
mar- market maker buy model
order flow, order
order flow.
flow.
Oh, um,
So you saying bullish order flow?
Yes, what is bullish order flow?
Upward trend. I don't know.
What's an upward trend?
so he taking us to school right now.
Let's do it.
uh,
Distribution.
Read your screen, man.
By program price engine models.
It says
I'll say accumulation.
no. Read the first two words.
By program.
buy program.
Oh, when
Buy
we growing bullish.
program.
Okay.
Oh,
Yeah. Buying the premium. Okay.
Buy
Buy
program.
program. Okay.
So your higher time frame is in a buy program, right? The higher time frame has not given us a reason to say that the buy program is over. So if you're just engineering liquidity, what do we do until price tells us different? We stick with what? Hmm? Hmm?
We're gonna stick with the buy program. Keep that in mind.
We gonna stick with whatever the buy program is, right? If it's a bullish, you know what I'm saying, trend, if we're in a buy program, we just stick with the buy program, right? So when Deborah said, right now, right, we have made a higher low and a higher high, right? So on the higher time frame, the buy program is still intact, right? The buy program is still intact. That's why, remember when I said price could very well come back up here and make a new higher high. It can do that. That's within bounds. Why? Because the buy program is still intact, right? If we had dropped down and taken out that low, we would have been like, oh, we just got a bearish break in market structure on the daily time frame, right? So now we have significantly changed the direction of price. We got a market structure shift. We got a break in market structure, right? So that's a significant thing on a daily time frame, right? So on the daily time frame, we just had a change in the state of delivery. Why? Because we came down below the opening price of our bullish order block, right? We just had a change in the state of delivery on the daily time frame. But since that has not happened, we can't just call the top. Right? So what do? We pay attention to the signs, right? Right now, on the monthly time frame, right? We rejected the high. So now we're looking back to the low that sent us there, right? As we're coming down, what has a job to stop us from getting there, right? We got the last down close candle of the bullish order block. We got a propulsion block, right? We got a BISI right there, right? So now we come down, we create an inversion of the BISI, right? That's a type of a change in the state of delivery, right? We trade down through this order block right there, right? That's a change in state of delivery on the short term, right? On the shorter term, because this bullish order block right here, we traded down through that. So we got a bearish change in the state of delivery here, but that's on a shorter term than, that's on a shorter term than here, because this was the move. This is like, let's just say an internal move, right? This is an internal move right there, because this is the move that took out that liquidity there. So this here is your bullish order block there. Okay. But we got a short term change in the state delivery, right? This right here would be anticipated. Why would that be anticipated to have a change in the state delivery there? Who thinks having a change in the state delivery here, blowing through this bullish order block, was warranted? Right. And I'll give you a clue. The same reason why this inversion fair value gap was warranted. Why was it warranted to blow past that or create an inversion bullish fair value gap? all the PD arrays got an inversion quality. Exactly. It's a bullish fair value. It's a bullish order block. I'm sorry, that was created in the premium of this move right here. So we're not looking to buy off of that. It's in the premium, right? If you're looking to buy off of it, you can do it for a a lower time frame purpose, because it's in a discount of this range here, right? And you could play it in the short term off of that, but in the sense of this move, it's in the premium. So it's allowable for that to be closed below, right? And that's healthy price action, right? So now we have a bearish dealing range that we're watching, right? While we're watching this bearish dealing range, we're going into a seasonality that's bearish, right? We've taken out higher time frame liquidity. Okay. So now we're looking to see if this bearish order block right here, if this bearish fair value gap right here, right? If this consequent encroachment of that weekly wick right there is going to keep price down, right? That's what we're looking for. What you're watching that to see if it keeps price down. Now, if you're bearish if you want this sale program to continue for the week, right? This is our weekly range, right? Where are we in the sense of our weekly range? We're in the premium, right? Let's come here and take some of these here. We don't need those no more. Right? We come here for our weekly range. We're in the premium. Okay. Now, if, right, you're bearish and our overall dealing range, we're in the premium. All right. Remember, we came back to a premium. Okay. So if you're bearish overall, right, what would you want to see? You want to see some level of buy side liquidity be taken before price proceeds down. Okay. If we get deep, if we get a deep retracement, right? What do we have here? Right? We have a BISI that was created on the way, taking out that monthly high, right? The first BISI created, taking out that monthly high, right? So we come back into this bullish order block that we got an inversion of, right? Once we come back, once we get below it, right? This can be used as what? A bearish breaker, right? Because it's a bullish order block and it falls in line with the narrative of this being a bearish change in the state delivery. So now you can look at that as a bearish breaker, right? If you have a bearish breaker with an inversion fair value gap there, especially if it's the first BISI that was created when you went and took out that liquidity, right? Now what do we have here? We got a high probability inversion fair value gap right there, right? And if price traded up and took out that daily high, right? And even if it didn't want to take out the weekly high, we're still engaging buy side liquidity before going down. Right now, in the sense of the buy program still being intact, or the channel or the wedge or whatever Miss Monica called it, right? We're chart patterning now, right? We got the ascending wedge, or the channel up, or the channel up, whatever, whatever you want to call it, right? You got your low, higher high, higher low, right? Now we look for it to go make a higher high. Right, we're going to look for it to go make a higher high. So for the bullish scenario, right, we've come down into a discount, taking out internal sell side liquidity, right? And now we would need price to come back up here and create an inversion fair value gap there, right? This is our first SIBI that was created as we came down and took out liquidity. So we would need price to create an inversion fair value gap here, and then use it as support to go and take out that high. Right? That's what you would be watching for the bullish side. But since price is here engineering liquidity, we don't try to force anything, right? And not only is it just up here engineering liquidity, what happened right here, right? When we traded right there, what happened? Who can tell me what happened right there? Shout out to Black Al Davis for pulling up. Hey, Ron say you're gonna full port somewhere. Shout out Mike Pinks fly that pulled up in here. What happened right there? Somebody tell me what happened right there. We said we was chilling because price was just engineering liquidity up here. And I said not just because it's engineering liquidity. What happened right there? When this daily candle of August the 12th traded right through that high right there. What happened right there? When that August 12th daily candle traded above the high of this July 31st daily candle, what happened right there?
It looked like we set a new high.
Yeah, we set a new high, but what's the significance of that? What's significant about that high? What, you know what I'm saying? We set a new high. Why are we chilling? Because we set a new high. What's that? What's the significance about the high? What's so significant?
All right, this teamwork, y'all help me out.
We created all-time high. Who cares? We created all-time highs. Who cares? But why? If we're chilling, right? We know why we're chilling, because it's engineering liquidity over here. Okay, it's engineering liquidity. It's ranging, so we're chilling. But what happened right there? Before we even knew that we was just ranging in liquidity, we said something about that high right there, and we was chilling because it hit it.
I don't know. Why you think it did that?
I know,
Ain't,
right?
ain't got nothing to do with a busy. It reached. Let me hold on, man. Let me help y'all out. Y'all, boy, y'all, ooh-wee. What happened to stacks on stacks? What happened to stacks on stacks?
I said changing the state of
What
delivery,
happened to
but
stacks on
that
y'all?
won't it.
Cause y'all be trying to think too deep. Y'all always trying to think too deep. Let me help you out. Does that help you? Does that help you? Hmm? Hmm?
What you saying about the monthly high, the high on the we took out a high on the higher time frame is what you saying?
You in the ballpark now.
I
You
think we completed the buy side. We completed
you
the buy.
you there? You there? You completed that model, but right?
We
But what does that
we
mean?
got to our draw.
We got to our draw on liquidity. We made it to Picasso's house. When you make it to your
Picasso.
destination, you just chill. You kick your feet back and you let the algorithm tell you what it wants to do next. So when we got to our draw on liquidity, and for those that might be new here, this little magnet right there, his name is Picasso. That's Picasso. Picasso was an artist. Artists draw. The magnet draws price to it. That's why his name is Picasso, right? We made it to Picasso's house. When you get to Picasso's house, you're at your destination. There's nothing else to do but just to wait to see what the algorithm is going to tell you it wants to do. And since we made it to Picasso's house, what has the algorithm been doing, right? Nothing. It hasn't gone any higher. It hasn't gone any lower, right? Since we made it to Picasso house, it ain't going nowhere, right?
So this where we generating liquidity, right? Just
Yes.
consolidating, and then
Even
ready to hit them with a Judas wing.
even when we made it to Picasso house here, right? We made the Picasso house here. What has it really told us that it wants to do? Nothing. And we've just been trading in this. Man, we said we've been trading in this range ever since back here, right? On this, when this weekly candle came above here, right? We've just been trading in this range. Well, Tim, how do we say that's Picasso's house there? Because based off the lower time frames, right? The market structure that was being created, that was the draw on liquidity. Well, Tim, why was that the draw on liquidity? Because we are still in a buy program and the algorithm hadn't given us a reason to say, okay, I'm done with this buy program. All right. What's up, Joker?
Tim, I know you ain't got no crystal ball, but like right now at this time, when you're saying we ain't doing nothing, you're just sitting on your hands and let it consolidate and generate the liquidity, right?
Mm-hmm.
Basically, you just sitting waiting on the wig snatcher. I said Judas first, but once you see the wig snatcher, then you're gonna be looking for the entries after that.
On this time frame, yes.
Yeah, on this time.
Yes.
Okay, all
Yes.
right.
So on this time frame right here, this is a weekly time frame. So with a weekly time frame, what are we looking at doing? We're looking at buying calls, buying puts for 6 months out, 3 months out, like longer time term swing trades, right? If you got the cash in your account, holding longer term positions for futures, right? You're looking to get into longer swings. But on this time frame right here, the algorithm hasn't given you anything, right? It hasn't given you anything since we came to Picasso's house on the weekly time frame back here. Hasn't given us anything, right? We're just engineering liquidity, right? On the daily time frame, right? On the daily time frame, when we, right, let's go back to the weekly, right? So on the weekly time frame, this is when we got to Picasso's house for the weekly time frame there, right? Then on the daily time frame, okay, on the daily time frame, we got here. Right? We came here. That's when we came above. We started consolidating, right? Then on daily time frame, we took off. Boom, right? Took off to the upside. Once we took off to the upside, right? We're still in the buy program. We took off to the upside. Then we retraced back down, right? And we took out the sell side liquidity, right? Once we took out sell side liquidity, right? What do we say? Going into August, we want to see this high taken out before starting the bearish seasonality, right? What do? We go back. So we've expanded, come back to a discount, right? Into our bullish breaker, right? And we went back and took out the high. That's why on the daily time frame, that was our draw, because based off seasonality, based off what price had done, right? Consolidating here, then expanding up. We said this was our draw on liquidity for healthy price action to come into the bearish season, taking out higher time frame buy side liquidity. Boom, there we go. Got our buy side liquidity taken out on the daily time frame. What was that still in line with? The bullish order flow, right? The bullish order flow. Okay, now we're up here. We're still engineering liquidity. Now that we're up here engineering liquidity, what else are we doing? Right? Where are we engineering liquidity at? What was this right here? Who remember what this was? This buy side liquidity right there. That was what? That buy side liquidity was what?
This what used to be all-time highs.
All-time highs, right? That was all-time highs right there. What do we have to let the algorithm do at all-time highs? What does Bob the Builder have to do at all-time highs?
Form of structure, I think.
Yes, build structure. Very
yeah.
good. Because there's no structure over here. There's nothing for us to look for. We're at all-time highs. So when you get to now that we're here, yes, we're engineering liquidity, but what do we have to do? We have to build new structure, right? When we're building new structure, what does the algorithm do, right? It trades back and forth, allowing buy stops and sell stops to form in the market so that it has liquidity to engage, right? It has liquidity to engage. So you go make an all-time high, right? Create a liquidity pool, right? We got short-term sell side there, short-term sell side there, right? More sell side there. That's more than short-term sell side there. We'll just say intermediate term sell side for right now, right? So then we come here, right? Now, this right here is some intermediate term sell side now. Why is that? Because we have a short-term low there, and now we've created a short-term low there, right? So now we have an intermediate term low here, right? So now this low is more significant now. Remember our little man? I'm important now. I'm an important low. So now that low is important now, right? So now, if we take this low out now, we're taking out a very significant low, right? But if we would have just came straight down and took that low out, you know what I'm saying? If we just came straight down and took that low out, it wouldn't have been as significant. Why? Because we didn't have this structure created here, right? We wouldn't have had this structure created like this, making this a significant low, right? Yeah, it could have just came down and took that out, no problem. But it's building, it's forming new structure now. You see what I'm saying? So even if we went up and took out that high, right? It can do that. Why? Because the buy program is still intact on the weekly time frame. Right? It can do that. Right? So that's why right now at this point, what are we doing? We're sitting on our hands because we can algorithmically formulate price going up to that buy side and price coming down to that sell side. We can algorithmically show reason for it. But Tim, how are you going to do that? I'm glad you asked that question, little Timmy Rogers, right? Because like we said, we created a low and then we created a high. When we created that low, we created a new liquidity pool. When we created that high, we created a new liquidity pool, right? When price takes out a low and takes out a high, we take out a low, then we come back and take out a high. What did we just create? What did we just create? We take
A
out
new
a
That
dealing
was the
range.
Judas. Yeah, oh, okay.
just yelling stuff. This is why we gotta go, right? We create a bullish dealing range inside a buy program, right? Then we retrace back down to the discount of that range and took out internal sell side liquidity. If you are in a buy program, where do you want to buy it? And before you buy, what do you want to see happen? Where do you want to buy and what do you want to see happen before you buy?
I want to buy in the discount, but I want price to take out the opposite liquidity.
You want to come back to a discount so you can buy, and you want price to take out sell side liquidity. So we created a bullish dealing range. We came back to a discount. We took out sell side liquidity, and then we start to go back up. Is that not an algorithmic reason to believe in price continuing to go higher? Yes, it is. It has done it right there. Now, we took out a high, created a liquidity pool. We took out a low, a relative equal low, creating, let's just delete him, right? Creating a liquidity pool here, relative equal lows, right? Now, what do you do when you take out a high and then come down and take out a low? What did you just create?
Relatively equal lows.
Relative equal lows. And what did you create? We already said relative equal lows.
Another bearish range.
Created a bearish dealing range, right? So when you're in a bearish dealing range, right, what do you want to see happen? You want to see price come back to a premium to give you a reason to sell, right? We've come back to a premium. We're respecting the premium PDub rate. Now, the only thing that's missing that would make it ideal is engaging buy side liquidity. So in this bearish dealing range, you don't have any buy side liquidity inside there. So what would the algorithm have to do? Create buy side liquidity. So we come up and now we got a daily high sitting right there. So now we have buy side liquidity, right? So as of right now, this sell program has not been invalidated, right? So you're respecting the premium PDub rate. You've created internal buy side liquidity, right? So now price could take out that buy side and continue down to these relative equal lows. So right now, this sell program has not been invalidated. Right now, this buy program has not been invalidated, right? So right now, we're in between the tale of two cities. you can algorithmically form a reason for price to go up and price to go down. When you're like that, that's not high probability. So what do? Sit on your hands and be quiet, my child. Right? So for these higher time frames, we're still at the point where we're just sitting on our hands. Why? Because we can form the bias in the narrative both ways, in both directions. Right? Let's jump way down to a 60-minute time frame so I can adjust my lines over here. Right? Really no need to dig like deep into the price right now. Right? No need to dig into the price deeper than the daily time frame right now. As you can see here, right? As you can see here, right? Price is showing that we're on the right side of a market maker sell model on the 60-minute time frame, right? So the daily time frame, we're in between the tail of two cities. The weekly time frame, we're just consolidating at the top of bullish order flow, right? In a buy program, just consolidating at an old high, right? But on the intraday time frame, like the hourly time frame and the 4-hour time frame, right, we're on the right side of a market maker sell model. So on the intraday time frame, we're on the right side of a market maker sell model. So on the intraday time frame, at this point, what are you doing? You're looking for reasons to sell, right? Until proven wrong, right? You're looking for reasons to sell until proven wrong, right? We've come here, we've engineered sell side liquidity. We've moved back into the premium, right? We're respecting, like we said, that daily fair value gap, right? So you're just watching to see if price wants to respect the smart money reversal, right? So right now, we're looking at this right here as our smart money reversal. And on this 4-hour time frame here, right, what are you looking for? Do you get that low risk short, right? Do you get that low risk short? We're looking for when the price is moving, right? We're not trying to dig into this right here and be like, oh, this is our low risk short right here. No, we're just kind of doing right there, right? Price moving, boom, price moving, boom, right? You're looking to see if we get that low risk short on the 4-hour time frame. All right. Still looking for the 4-hour time frame to build it out, right? Identifying that as a possible smart money reversal, right? Why? Because we came up here, took out that high, and then we came down here, took out all this sell side liquidity. This right here gave us a bearish breaking market structure right there, right? Trading down below that low there gave us a bearish breaking market structure. We swept all of that liquidity there. Okay. Now we've engineered more sell side liquidity here and then moved into a premium. Okay. All right. Remember what we was talking about before, right? We was chilling here, not doing nothing because we was in a discount of our range. Now we've moved back to the premium of the range. Now we're looking for signatures, to look for a reason to get short, right? But we're not just going to jump in. We need price to give us something. 60-minute time frame, right? So on the 60-minute time frame, same thing. We're doing down. Price start moving, right? What are we doing? Looking for, do we get that low risk short, right? Do we protect the smart money reversal, right? Do we get us a daily or maybe even a weekly attack on liquidity, right? Then come down. In the sense of the weekly time frame, in my opinion, healthy price action would be taking out the weekly high before continuing down, right? Why? Because we've already taken out monthly high, right? And created a new high on the weekly time frame. Then we can go in and take out a weekly high, right? To give us that weekly manipulation, right? Take out that weekly high to continue down. That'll be healthy price action. And plus that'll be revisiting that old high. One more poke above that old high right there. Boop. Come back down. One more poke above. Right. Yeah. All right. Got a lot going on with all these boxes on here, so we're gonna hide some of these. Gonna hide that. Gonna hide that. Hide them daily sippies there. Too much going on my chart there. Oh man, I'm tweaking. I put it on the bottom of the candle. And y'all weren't gonna tell me nothing. Y'all just gonna let me do that. Y'all just gonna let me do that. Y'all just gonna let me put it on the bottom of the candle. Want them to tell me.
We'll just wait until you were finished. We ain't want to interrupt.
Yeah, sound good when you say it. I say it sound good when you say it. What y'all know about foghorn leghorn, man? Y'all don't know about foghorn. I say I'm not gonna look because I might just be in there. Who said sure don't? It learned it says she don't know about foghorn leghorn lump. It learned
Oh
it
man.
learned shit, what you 12? Like it learned shit, what you 12? How you don't know about foghorn leghorn? What is that? What? Deborah, you know who foghorn leghorn is?
Yeah.
I say he'll learn and Shell don't know who foghorn leghorn is, Deborah. All right. What's up, grandbaby? How you feeling, champ? I heard you was
Oh,
under
you
the
heard
weather.
him. He was.
I heard you was under the weather.
Yeah, he
You
doing
were.
better.
I know Pop Pop took care of you, cause grandma, she be all
Stop.
right. I know. All right, man. That's it, man. That's the weekend chart prep. Anybody got anything for me? Just always remember, right? We're not trying to force price to do anything that we want, right? We look at the signatures and we trade what we see. Now, when the higher time frames are in range bound conditions and consolidating conditions, that can create high resistance on the intraday time frames, right? So we have to be nimble. Jack be nimble, Jack be quick, right? If the higher time frame is moving, right, we want to identify, is it moving in terms of manipulation or is it moving in terms of distribution, right? Because remember, everything is built off accumulation, manipulation, and distribution, right? And it's not going to just always, we start a new week, so we're starting at Sonya. Y'all, man, y'all doing something to my nerve. Y'all talk about y'all don't know who Foghorn Leghorn is, man. Let me share my screen. They talk about they don't know who Foghorn Leghorn is. Y'all gonna stop.
Somebody else say they didn't know who it was.
Yeah, man. These folk in here 12 years old, man. These folk these folk in here 12 years old.
Hey, Tim, I have a question.
Yeah, go ahead.
So
Y'all telling me y'all don't know Foghorn Leghorn, man? Go ahead, I'm listening.
So NQ didn't reach close to all-time high, but Dow made it to all-time high. Is that a divergence of some sort?
You must have came in here late.
Yeah, I can't complain.
Yeah, we talked about when one of the indices make all-time highs and the other one doesn't, or any high, any low. That's divergence, right? If all three of them don't make the same relative high, and when we say relative high, we're talking about the high for that time frame, right? So if one or two makes all-time highs and the other one doesn't, that's bearish divergence, right? And right now, the NQ and the ES have made all-time highs, but the Dow has not. They made new all-time highs, but the Dow has not. Now, in the past, the Dow had made new all-time highs and the ES had made new all-time highs, but the NQ had not made new all-time highs. And at that time, we was trading the NQ as the sixth sister to eventually make them all-time highs. But yes, that is bearish divergence. Now, looking at the screen there, do y'all know who Foghorn Leghorn is now? Oh, I didn't know that was his name. I think you make this stuff up. You better stop playing with me. That's Foghorn Leghorn right there. And that's the little kid that was the little kid, his mom, Foghorn Leghorn, trying to holler at his mama, the little nerd boy. Foghorn Leghorn was trying to get at his mama. So he had to go play with the little boy. And then he was playing hide and go seek. And Foghorn Leghorn had jumped in this little box. And while they were playing hide and go seek, the little boy was sitting over there doing all these little nerd calculations, right? Oh, now I remember. Okay, Betty White. Is it Betty White or Betty White? Oh, now I remember. But anyway, Foghorn Leghorn in the box, right? And the legit over there doing all these little nerd calculations, and legit went and got a shovel and went over there and started digging in the ground. And Foghorn Leghorn peeking out the box. And like I say, what the boy doing over there? I say the boy's crazy. The boy that don't know how to play hot, just talking all kind of mess. And the legit kept digging and dug Foghorn Leghorn out of that hole he was digging. So Foghorn got up and he went over there. Foghorn, he went to go look at the boy. He's like, I ain't gonna look in there because I might just be in there. Oh, Fog, y'all don't know who Foghorn Leghorn is. Y'all stop playing, man. So I say how to draw Foghorn Leghorn. That's her right there. That's her Foghorn Leghorn girlfriend. That's her right there. That's the one Foghorn was trying to get at right there.
Oh my.
Foghorn Leghorn girlfriend. That's her right there. See, there she go with her son. Right? That's what I be making this stuff up. I don't make this stuff up, man. I don't make this stuff up. Let me see if I can demonetize my video. Let me see if I can demonetize my video. Son digs him out a hole. Let me see if I can demonetize my video real quick. Miss Prissy. Miss Prissy falls in love. That's her name, Miss Prissy. The best Egghead Jr. versus Foghorn Leghorn. Let me see. I ain't gonna turn on no sound yet unless I find it. Oh yeah, Junior, his airplane shot Foghorn plane. Junior airplane shot his plane down. That boy shot Foghorn down. I hit the wrong thing. Wait a minute. God dog.
Boxtrap. Well, there are this simple.
That what that boy.
Come on.
That boy shot. That boy he told him.
I don't see your screen.
That'll never.
I ain't sure.
Okay, now.
Come on.
Junior
And
shot
I'll
him
show you
down.
how to set up.
See it.
You boy, contraption.
That's what he got called.
I say you gotta keep on your toes.
He ain't on that. Let me see if he got it with the box. They got Foghorn. Let me see. Foghorn, Leghorn, and Junior, hide and seek. Hide and seek.
Oh, never mind, Einstein. Knowing the answer wouldn't do me no good anyway. Let's play hide and seek.
There you go. There you go right there.
That boy'd have to use a slide rule to find me in here.
Doing little calculations.
The genius must have got his signals mixed. He's heading in the wrong direction.
Got him a shovel.
But boy, over there, there's a box. I couldn't. Yeah, I know. Figures don't lie. But still, one side, boy. No, I better not look. I just might be in there.
Oh, Foghorn. Y'all tell me y'all don't know who fought. I just might be in there. Y'all stop playing with me, man. Hey, that's all I got. Tomorrow is hey, y'all know what? Since y'all been so kind to hang out with me on this Sunday evening. Tomorrow is Monday, August 25th. We got tape reading for Diamond members in the Discord and Mentee members in the YouTube. Right? Looney Tune gonna demonetize my video for playing that, but I don't care. Since y'all so kind of hang out with me today, we're gonna do a open tape reading for all of the gang. if you in the gang right now, send me a DM now. Say, Tim, I want to join the tape reading tomorrow, and I will send you the link to join on Zoom. You have to send it to me now before we get off of here. Send me a DM on Discord. Right. I am popping in. I am popping in. Kim. There you go, Kim. Who that is there? Sarah Smiles. Sarah Smiles. Light-skinned Deborah. Rhonda Green. We got Shawnee, you ain't a diamond member? I thought Shawnee was a diamond member. I don't know. Shawnee. Anybody else? Anybody else? Nobody else?
What we voting on?
No, you ain't got to worry about it. You already there. Anybody else? All right. All right. That's it, man. I appreciate y'all for hanging out with me. Tomorrow tape reading. If you want to be a part of the tape reading, I'll see you during the price action recap tomorrow. Again, I have updated the link for the Smart Money Manuscript because the other link that I had on there, it went directly to the checkout page. It didn't go to the page that allowed you to, to see what was inside the course. So, and I thought it just went straight to the page that lets you see what's in the course, but it didn't. So now it goes to the page where you can see what's inside the course. And I created a little video you saw in the beginning that the video has changed slightly, right? The promo video. Y'all do me a favor and share it, man. The sales are ashy for the Smart Money Manuscript. Put a lot of work into it. I'm all proud of it. And the sales are ashy. So y'all help your boy out and share it with people. Be like, hey, man, go get some good information, man. Get some good information. And you're too late, Sonya. My copy and paste and ran out. My copy and paste don't work no more, Sonya. You're too late. Hey, man. I appreciate y'all for hanging out with me. Until the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we call price action. It's your boy, Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That's just Big Spot if you know how to spend. Yo, y'all be safe out here in these trading streets, man. Gone.